Hello everyone. Again, welcome to the weekly call, and thanks a lot for making this successful. And we are doing it every week. It's a great discussion. Always good to have all of you asking good questions and also having some good discussions. So, again, just to set expectations here, so we don't have any specific agenda today. We are talking about the markets. We were sitting on when we set up this call earlier this week. We were sitting on all-time highs on S&P 500. Bitcoin was close to 100,000. So everything was looking pretty good till today. So it's a good day, I think, to discuss what is happening. We were expecting some kind of issues with how the liquidity in the market has been low recently because of certain issues around. For example, the if you look at the previous reverse repo which was issued by Fed, that was already draining out. And the but overall, I think we have also been monitoring that usually the debt market is telling us that we are in a pretty good shape. We are not seeing yields going up. In fact, today it is not the same as what we used to have like earlier, where the US inflation was told as a concern, but that definitely is not the concern because if inflation was the concern, we would have seen the yields also rising. So I will share the screen, maybe also discuss maybe on the charts and so on. And feel free to raise your hand. We can unmute you and we can have a discussion. And you can also add your questions in the chat if you are looking for a very specific advice or discussion point to be taken. So let me start with where we are on S&P 500. So I hope you can all see the screen. Um, so again, let's first of all be very aware of that we are in a very solid bull run. So this is a long-term chart on a daily candlestick chart. And you can see that today's blip is just one small correction. It's not even a correction because if you see the level of correction we saw in August last year and in December, January, we are still in this channel, which is a long-term upward channel. What we are seeing right now is this major drop which happened today. And this was also, people were predicting it on technical basis also because of the bearish divergence on RSI, where we were making new highs, but the RSI was getting weaker. So again, I don't want to get into too much technical discussion here, but basically we are just testing 50-day moving average, and we had a big drop today. Similarly, I think we had, I would say Bitcoin has been struggling to go above this highs which it had made. It has been consolidating in a small range. And mostly we have been discussing in previous calls about the AI trade and so on. I think very similar, I would say, whether it's NVIDIA, whether it is uh, other stocks, we are seeing some kind of, they're not able to get to their all-time highs. So this is more like a rotation which was happening, which we were seeing from earlier. It was the AI trade where NVIDIA and AMD kind of stocks were leading. And then we saw like stocks like Meta and Tesla making new highs and correcting. So we are seeing that correction. And if you look at the yields, which are pointing to much lower levels than what we had seen at the peak yield, 4.8%. Now we are seeing a more, I would say, neutral stance. They are not going down, expecting fast, slowdown in inflation. They are not going up, expecting a blow up in inflation. And Fed is in a pause state. So in last couple of weeks, we had also been discussing that from a macro perspective, we are in a sideways status. There is no tailwind of interest rate cuts. There is no headwind of uh, concerns around yields going higher up again. So now we are more or less coming back to what the markets are more or less reacting to the news on individual basis. We are seeing it's becoming a stock picker market. One thing which I would like to highlight what happened today, which we have been tracking, is the yen. And if you remember, we had discussed, and if you are a subscriber, we had discussed about how yen carry trade had impacted in the August timeframe, where we had a huge drop in yen very fast, which resulted in a big meltdown in August. And there is definitely similar scenarios which happened in last couple of days. And if you see this drop in yen, and that is main reason being, when I say drop in yen means appreciation in yen, it is when I look at 150 level, this is number of yen per USD. So basically yen is appreciating. The reason being last night, there was a inflation number which came out in Japan, which was pretty high, like 4% inflation, which is very, very high for Japanese markets, which is not the norm. They are a pretty low inflation market, and the Japanese yield were going up. The damage was controlled somewhat because of, I think Bank of Japan had made a statement that they are not in a hurry to raise interest rate, and they are going to purchase bonds to control the yield. I think that's one thing which controlled some of the uh, worst case scenarios, which market could have been in a much worse shape if that did not happen. So that is where I think one of the prime reason today, which could have triggered this meltdown. And secondly, as we discussed, there is definitely a technical failure to go and make a new high beyond where we were previously, and we were seeing this bearish divergence. So it's more of a technical correction. If we zoom in, you will see that it was pretty aggressive drop, but the volumes either were not very high. So it's not a like kind of a drop which we are too worried, even from a technical perspective. And next week, when NVIDIA reports, I think that will become now critical, in my view, on where the market heads, because NVIDIA is a very heavyweight. It is sitting in indecisive levels where it had recovered from the whole discussions around DeepSeek and why NVIDIA's future is over, to now again a very optimistic scenario where market is expecting great results. So if they don't deliver as per the expectation and they start correcting, that can have further impact technically on the market. And if they do great and go towards their recent highs, I think that will create a next tailwind. So I would say that will be the key event which we are waiting for now. I will again request people to feel free to ask any questions in the chat or raise your hand, and we can continue the discussion. So in summary, but where we are right now is we are looking at a market which had a pretty bad Friday with we were sitting on all-time highs, and we are probably seeing a money flow issue where either because of the pressure from yen carry trade unleveraged, or the just the technical correction. That's what the first read is, and we are not looking at any structural issue at this moment. Yes, Dhaval, go on.
Um, yes. So just to add a couple of thoughts to what you said, one is I feel certainly, I mean, I know you were joking when you wrote Black Friday, but certainly it was not a Black Friday in my opinion, and I guess you were joking and just having fun. But you can correct me if I was wrong, assuming that you were joking. And so I think it was quite systematic, and also the Japan thing is obviously worrisome because the rates went up in Japan and the carry trade gets affected. So that can have unsystematic stuff happen on Monday, Tuesday, whatever. But otherwise, going into next week, Nvidia earnings and some earnings, I think it's a good. I mean, it's a fair correction maybe. Uh, and now my question. So that's my feeling. Uh, and obviously the rates going down here was flight to safety, and obviously some of the numbers in the morning were not good. The future expectations, which was bad even last 1 2 weeks ago, Michigan future expectations 1 year was bad last time, and this time 5 year also became a bit bad than expected. And then consumer confidence, as you pointed out. So two micro questions to you. One is, you said rotation. So where do you think the rotation is? So so previously the rotation was happening from the hyperscalers into communication services like Meta and Tesla and all.
Mhm.
So now everything is going down. So what do you think about the rotation? Is there
Yeah,
rotation, or is it just a selling? That's one. I'll finish my question so then you can answer both. One is that, and second is, what is your prediction about what I know no one can predict the future 100%, but what is your best prediction for next week? Do you think Nvidia will just come in good and everything will rally up again, because Nvidia is expected to have good earnings given all the capex? So please, and their
sure.
expectation, their Blackwell forecast also may be good. So that's my perspective and my questions.
Sure. So I would say to take first of all, means again, I'm not going to take a risk of predicting, because remember, we are sitting on a very high valuations. We are sitting on all-time highs right before today's correction. So yes, it's difficult to predict where we are going. So, but remember, and one of the topics today also we wanted to discuss is the money flow. And if you see, one of the biggest thing which we are seeing in last couple of months, and especially since November after the US election, the heavy inflow into US equity has been because US dollar has been strengthening. The US equity are seeing record inflows. And recently the reports are saying that the retail euphoria is really high. and we are seeing a lot of retail money coming into US stocks. So this is typically a sign of, we say peak optimism. So we are definitely seeing that as one impact. And there was another data point, especially in the tech stocks, and especially around, the which I think Goldman Sachs or somebody had published, that there was a heavy unleveraging of the hedge funds and the institutional money while the retail is buying. So in general, the money flow right now is pointing to that we have more retail participation in the stock market while the institutions are deleveraging. In this scenario, so what we can say is that yes, we are at higher valuation. People are not sure about continued growth. That is one reason why we are seeing overall rotation where every sector which was overvalued corrected, and people sectors which were undervalued, they were getting buying. So this is a normal process. Means this we saw, by the way, even during 2023, 2024 corrections. We had this whole move where we always see where the hot sectors start correcting, and this is healthy. Means when we have rotation and the index is not correcting by big amounts, that means that market is balancing itself, because it's always there are leaders in every part of the rally. Like as we discussed, AI trade was the leader earlier, and then everything else caught up. And now we are looking at again that taking a backseat. In the middle, we had biotech and all these stocks leading. But what we saw in last couple of weeks, like if you look at the kind of rally we saw in Palantir, or we saw in HIMS, or we saw in like SMCI, some of these stocks which are not as solid in terms of their earning, like, or let me put it other way, let me not comment, they are great stocks, they are doing great, but the rally was disproportional to their strength. Like when your stocks are going up 4 or 5x within, like, last 12 months, when your stocks are going by 100% in within first 2 months of the year. These are the cases where we saw there was excessive buying, and these are mostly retail focused stocks. So this is what I think it was a natural correction. Now to answer the second part, Nvidia, I think we discussed it in great detail 2 weeks back when we discussed the AI trade, especially after the hyperscaler earnings. We so definitely the earnings will be good. Now it's less about whether the earning will beat the average numbers or the whisper numbers, which are like best estimates. And the reaction of the market may not be based on, like, what is the whether they beat their previous guidance, which is almost now priced in. If you look at it, like they have been doing it every quarter. Whenever there is a guidance, they go and beat that guidance. And looking at hyperscaler spendings, we know that there is no slowdown in infrastructure growth. So we know that they will beat, and this is the reason why Nvidia improved from the DeepSeek based correction to now we are at 140 plus and coming back to 135 now. What I'm trying to highlight here is that how market will react is tough, but my expectation is the earning will be great. I think market's focus will now shift to the guidance again, because remember the last quarter, the growth rate of the revenue growth was like slowed down quarter on quarter. And that is one question mark which market will have. So I would say the biggest parameter to pay attention on NVIDIA earning will be of what will be the growth rate of from quarter on quarter for the next quarter guidance. And second number which market will look at is the margin. The gross margin have been going down slightly. Blackwell was supposed to give a boost to the gross margin to Nvidia, but because of slow ramp up of Blackwell originally, we had a some gross margin impact. Now, the second question mark is whether there is a pressure on their pricing that their gross margins are coming down. So these are the two factors which can have a negative reaction, while the revenue and EPS growth we are expecting to be very good coming out next week. So, and now coming back to, I think generally the biggest issue here is not just um, the specific, like these are fundamentally all the stocks currently are at pretty high valuations in general. They are fairly valued. You can justify stocks correcting another 10% or 20% as S&P 500, and still we will be not be overvalued, undervalued. So from that perspective, market is very heavily determined by money flow beyond fundamentals. And as we said, like today, probably there was a huge impact of yen carry trade. There was impact of some, and by the way, today we also had a monthly expiry, which is, there are the moves get exaggerated because there is a huge amount of open interest usually which has to close. So you will see a lot more liquidations on such days. So and monthly expiries and weekly expiries have usual volume. Every Friday we see some volatility, but monthly usually creates additional pressure. And especially this particular monthly expiry was after the earnings season and so on. So that created some additional volatility. And maybe coming back to or one another factor was crypto. We had one of the biggest hacks of recent times with which was disclosed today morning. So Bybit, and I think somebody posted in the channel also. So they lost $1 billion in a hack in Ethereum. So I think that was also one of the reasons. Market had multiple forces working against it today, which resulted into this kind of a volatility which we saw today. So that's my take on what we saw currently. And again, as I said, like we are still in a pretty much in the upward channel on the at a broad level. We are in a bull market. This correction is technical in nature. It usually good to take out the leverage from time to time. And then the next question now is what is the next momentum signal? Like whether it is because of either Nvidia earning. By the way, Nvidia earning is still 3 4 days away. We have a lot of trading before that happens. So what happens on Monday will be critical, whether the market sees buying here. What happens over the weekend in Bitcoin market will also give some signals because crypto is a big portion, big market cap now, which impacts market liquidity, which impacts the sentiment, and people watch that for signals. And by the way, we also had this question that we should include the crypto in this discussion because there's a lot of interest from the last call. We had pretty good discussion. So let's also focus on that because we are seeing some excessive, commentary around why Bitcoin is done, and this is the typical discussion which we always see whenever there's a consolidation range between 90,000 and 108,000. Right now we are having, and we had a great discussion last time where we highlighted that this is the normal behavior. Like we have this whole distribution of in range before we see the next big signal. And we are seeing very good on the ground progress. Even there was another good news around like how Coinbase case is going to be dismissed by SEC, and a lot of other good developments happening on the crypto side, which is pretty encouraging overall for the market. So again, all of you who are joining the call now. So just to repeat that, you can raise your hand or to unmute or ask a question, or you can also put your question in the chat. We are recording this call, so if you don't want to disclose your name or if you don't want to enable your video, it's your choice. All right, so yes, go ahead, Dhaval.
Yeah, since no one raised the hand, I thought I'll just a question I typed on the chat. Does anyone have any idea about the Blackwell heating issues? Because I think that that will be one of the important aspects that will determine forecast from NVIDIA. And that's an important number, right? The forecast that NVIDIA gives. So, Raman, I don't know if you have any more insight into that, or anybody on the group being in the technical line, like Naresh is in the chip space and other folks.
Yeah, I think anybody is free to comment, but my personal view is that usually, means of course, nobody should disclose anything which is not in public domain. And based on the analyst report which I've been reading, I think this is not a concern. That is my view because there is a couple of analyst report who came out in last few weeks that they are expecting great earnings. There's no impact, and also the guidance. So I think but that was one of the reasons why Nvidia recovered as a stock, and generally trade has recovered a bit in last, I would say, month or so. But yeah, feel free to comment if anybody has anything to add to that. Um, so I think coming back to our agenda in terms of money flow, that is one thing we wanted to discuss this time as a macro picture. So I would say that going back to the discussion around why we have this whole issue around retail money coming in very heavily versus the smart money. And I think before we had started this call, there was a very good question, I think, around Buffett and some other big players are piling up cash. So I think that is where we are seeing that uh, there is a kind of a wait and watch approach. People are a little bit spooked by whole tariff discussion from Trump administration. There is uncertainty around the trade. There is uncertainty around what is going on at a macro level from Like, what will be the impact of those tariffs? What will be the impact of the cost cutting? And let us also understand that while a lot of people are encouraged and a lot of people are skeptical, there are both kind of narratives right now around the whole cost cutting drive, which Elon Musk and company have taken under Dodge. So that is going to be net negative for the market. Remember that. Let's not, like, while it is great for the country, probably if they manage to do it, uh, I don't know if, first of all, whether they can really achieve it, because market is not believing in it. Otherwise, this would have been a much more sharp correction in the market. Because if you are able to cut spending, remember that all this spending and the continuous addition of debt is what one of the reason why we have this bubbles in assets, how why we are seeing all the assets going up. So it's a question of whether you can really make a difference on that. That is a big statement, and that will be net money flow negative if you are looking at cutting costs at the government level. So I think that is where we have very significant uh, um, kind of impact, which market is not like sure on. By the way, there is a question here on chat which says, why did the gold not go up? I would say gold has been in a kind of consistent bull run. Means I won't worry about it one day. Means if you look at weekly level, gold has been making new highs every week. So gold is more of a is doesn't work in an as volatile way these days because of very heavily hedging, very heavy institutional interest. So to answer your question, I would say we should not look at gold at a day-to-day move perspective. And from a week-to-week perspective, gold has made another new weekly high today, and we are almost close to 3,000, which we had projected around last year that this will be the bull run target at least. So we are pretty much happy with how gold is tracking the bull run targets, and it's even now. I don't think that bull run is over yet. So that is my response. But yeah, it's when you say flight to safety, just to conclude on the question, gold, while is considered flight to safety in medium term, in a short term, all assets are correlated. And we have discussed it many times because of the liquidations which happen. And if it was the impact of a yen carry trade, um, then I think we are not going to have this kind of a scenario where we will have this kind of response. Um, I have another one right hand here. Yes, Ankur, go ahead.
Probably obvious to the folks on this call, but you said that increasing debt, increasing money flow, and then thus creates a market bubble. Can you explain that
Oh, sure.
correlation if you don't
Yeah.
mind?
Yeah, so I think no, that's a very good question actually. Like definitely not obvious it in initial days, and it's a good question. Thank you for asking that. So how it works? What is the money flow? Like I mean, I would recommend you to go and read and maybe do a simple YouTube search on Khan Academy. There's videos around M1 money and M2 money. So basically, when there is more spending and when you raise more money in debt, that debt goes as a new money supply because that debt gets added to the balance sheet, with which adds up to the money supply. And typically, that money is available. Like if it's whether it's a Fed balance sheet, whether it's a bank's balance sheet, who take money from the Fed, that is used as a leverage for like the M2 money gets leveraged over time. Like when you are holding that as a collateral, you can lend more money against it. So that is what we call it as a total money supply, which is growing in the economy. And now we go back to the basic economic principles. Why asset prices go up when you have more money supplies? It's about your resources are same. Your Nvidia stock is number of stock is limited, your Apple stock is limited, and you are creating all money supply. It will probably everybody, and because of the information age, everybody knows what are the top 10 assets. And we know that gold is good, Bitcoin is good, Nvidia is good, Apple is good. And then all the money gets parked in these same assets over and over again. And as you multiply this money, if you study what is M1 money, M2 money, M3 money, you will realize that every dollar created accounts to $10 ultimately in the economy. So the same money gets utilized over and over again because of the collateralization of that assets. So that is how it works. And if we have ability to cut this debt down or the whole net spending down, we will see some kind of a decompression of these bubbles. So that is what we are expecting. But again, we have not seen anything solid yet, which it will make an impact. So we are seeing it a lot of claims right now, but I think If you see even now, don't definitely there is some deficit reduction since Trump came into power. I would say since inauguration, we have seen some reduction in debt. When I say debt, I mean deficit, not debt, but debt is still being just because of the interest payments we are making right now at 4% plus. The debt is still growing very fast. It's still very almost exponential. So I don't think that is changing anytime soon. All right. So one comment which came in is in terms of not so just to clarify, if we are recording this video, even if you show your video, even if you show your name, it will not show in the recorded video. But so that is how the settings of Zooms are set up. So don't worry about that. But if you are, means this video will be public for sure because we are sharing it with the rest of the community. Um, so that is a quick comment. Anything else on the chat? Let me quickly review, but feel free to ask your questions. Yes, go ahead.
Yeah, just to add to that perspective about Doji. So with all the cost cutting happening, on one hand, the money is coming out of the possible spending of that money, but on the other hand, the confidence in U.S. Treasury, 10-year Treasury will increase because of that, and hence the rates may come down, and hence that may be overall good because when new bonds are issued, they can be at lower rates by the government,
Yes.
and overall that's a good thing, right? Of course, all that funny stuff about $5,000 per person getting from the 20% of the savings and all that, we'll see. It's all maybe just PR or
Yep.
whatever. But I think overall it's a good, all things. I mean, putting everything in one bucket, it's a good effect overall in the macro.
Yes. So let me put it this way: there are two things here at play. One is yes, you're right. If we can really get better debt management, and if we can show a path, market works on confidence. Market doesn't work on actual numbers. Market looks at the direction. And just by signaling that there is a focus on reducing deficit, that can help long-term rates. So definitely that is one big thing. Second part is there are multiple tools which government has. So and if you see as soon as Besant was sworn in, he did say that their parameter is not stock market but 10-year yield. And you can also do a lot of treasury management by changing the issuance of what kind of debt you issue more and what you issue less. That can also, we call it a yield curve control in some form, where you can buy back certain treasury. So they are trying to define their target to reduce 10-year yield, which is considered as a cost of capital in the market. So that is actually positive net net for the market, because that is definitely one of the reasons where the valuation will go up. If the 10-year yields can be, and that's why we keep tracking also, right? We just reviewed a little while back. The 10-year yields are actually coming down right now. So since Trump has been inaugurated, which is a great sign for the economy. And I think that is one positive factor for the market, irrespective of how the rest of the things go. So we have a couple of hands. I will let them ask the questions.
Hi. I just pulled up for this is just like clarification of the terminology so we can kind of read up. But
Mhm.
the money supply, like we were discussing money flow, and then on Khan Academy they have money supply M0, M1,
Yes.
M2, and then there's also market microstructure, but is money flow, is that like will that be referenced on Bloomberg, or if we want to read up on it more, because there seems to be like what's the actual, what's the
Mhm.
correct term we can use to kind of read up on this more?
Sure. So it's again a very good question. So money supply is the underlying macro, which can act as a tailwind, and you have very specific numbers available. If you go to the Federal Reserve site, it's a FRED, Fred dot St. Louis. I think this is one of the websites which you can search. You will see exact numbers on a month-to-month basis, or some of the numbers are available week to week. So yes, money supply is the absolute numbers. Money flow is very difficult. It's not objective. It's an analysis of what is happening. Um, and that is what I think we are looking at, like, some of the analyst reports. And let me tell you, none of the money supply parameters are absolute, because ultimately it's observing what is happening. So like some people, or in old days when there was only two asset classes, bond and equity, we used to see a very clear inverse correlation. When equity goes up, bond goes down, bonds go up, goes down, because money was rotating between the two, and people used to correlate that because there is an inverse correlation, the money flows from bonds to equity and equities to bond. And also we used to see in many literature of some of these in money managers, they used to talk about this kind of principles, that when market valuations is high, you should go into bond, and so on. So money flow is not objective. Let me be very clear, and don't, like, you can read a lot about it, but you will never ever get an objective read. These are mostly interpretations. So what I'm referring to, at the start of the call, we discussed, there were a couple of reports which came out, I think Goldman Sachs and Morgan Stanley, these analysts, we do a lot of research, they have access to a lot of proprietary data. They talked about how retail inflows have been very high, how some of these funds have been cashing out. And then there is a big parameter every quarter. All the big funds like Warren Buffett and Berkshire, all these hedge funds, they report their 13F. This is a regulatory requirement that if you're managing money for more than 100 million, you have to report your net cash position, net portfolio. So you will start seeing, people interpret for those data points that these big investors are cashing out. And so the money is exiting equity and so on. So to answer your question, yes, means money flow is not a kind of a theoretical term. It's more of a observational thing, which you will see from various analysts, while money supply is a very much a theoretical and very objective thing, which is reported by different government agencies and so on. Let me unmute the next couple of hands. Again, just to repeat, you don't have to repeat your name if you don't want to be featured in that. Go ahead.
So, hey Raman, I am driving, so can't come on the video. I'm a new subscriber and joining this call for the first time. So thanks for organizing, learning a lot. I have a tactical question. So I've been following the trade alerts, and there is some guidance that comes out with it that, hey, you can buy this stock up to this price. And so I'm just curious, like at what point or what signals you will use to maybe update that guidance, if at all.
So again, just to set the expectations, so we have some other non-subscribers also on this call. But to set the background for others, we have this all access subscription where we have a model portfolio and we do provide guidance on stocks to buy and so on. So yeah, to answer your question, we do keep updating, and we have our dedicated Discord channel to ask specific question. But whenever we adjust our trades, when we are either exiting a trade or we are issuing a kind of a rebuy or something, we keep updating there. So you keep watching out for that trade alert channel on Discord, and I do recommend everybody to be there on Discord. And also, usually in the full newsletter update on a regular basis, we keep giving our views on each of the picks which we have on what we believe. But I think buy up to prices are usually not updated on a regular basis because it's not something we want to change day to day. They are changed on maybe a quarterly basis when we update the new newsletter. So whatever is the last guidance, that still sustains till you receive the next updated newsletter. I hope that answered the question. Otherwise, let's definitely you can put this question and maybe we can have a detailed discussion over Discord or other places in the subscriber only channel. All right, so again, there were a couple of questions from the subscribers that how do I get on Discord? So I would say please request this to our admins and we can arrange for it if you are already a part of our access subscription. And we will send it again to all the subscribers. So there's another question in the chat. If the stock is down again on Monday, is it recommended to buy the dip? Yes, I think so. Okay, that's again means I would not go. And by the way, one more disclaimer before I comment on that. So this is not supposed to be investment advice. We are not your investment advisor. So this is a legal disclaimer just before we go forward on this. But my personal view is that we are in, again, as we looked at the chart, and we can again share that we are in a very long-term uptrend. We have nothing changing structurally in the market. Every dip has been bought into, and I am a big believer in that unless market tells you, unless there is an actual something structurally changing in the market, one should not expect, try to be contrarian. So if you look at today, we are still in a pretty good, like GDP growth is great. Macro headwinds are gone in terms of rates are now stable. And we are not looking at any major headwinds, especially 10-year yields are stable, which were threatening at one point to break out above 4.7%. So I would say there's nothing specifically wrong with the market. And of course, yen carry trade, we have to watch out. So there are two parameters I would watch. How do the yields react on Monday morning? If the yields are not shooting up, when I say yields, it is US 10-year is a great parameter. Second is if yen is not dropping way below 150. I would say if either of this is not, threatening the market, it's probably a good buy on dip market. So again, that is not as an investor advice. That is based on what I'm seeing in terms of where we see the market in a longer run. In short term, I think there is a very heavy chances of market direction to be changing, and especially AI trade. When I say markets, because remember, the market, there are multiple micro markets within the market. Most of the index returns are linked to the AI trade because of the heavyweights like Nvidia, Microsoft, all of these. They are very heavily impacting the overall direction. So Nvidia earnings will be a very big factor ultimately next week. We have already talked about it a couple of times. So let us continue looking into those. But yes, at this moment, we do see that this was an overreaction today, which was further made worse by the monthly expiries of the options. And it started with probably yen carry trade and probably with some other deleveraging, which happened today. Yes, go ahead, please. We have a couple of hands again.
Raman, you can let AG go first. I don't think he has asked a question. I'll come back after him.
So
Oh,
please go ahead.
thank you. So I think the meta question behind my previous question, so obviously you answered my question there, but there's a meta question, right? Which is that if someone's coming in to markets from no background, right? No background in, and they may have a systems background, or they may a STEM background, or they may have no background, or and a systems background is helpful. However, even like maybe with a systems background it's easier, but how do you actually, I mean, did you kind of for students, did you as from the perspective of a student, not necessarily a full-time student, but just a student of the markets, actually the curriculum, it doesn't really exist in any structured way, just like the topics, right? We were talking about money supply. There's things from macro, there's things from macroeconomics, microeconomics, finance, and option derivatives, all these things, including money supply, money flows. So how do you recommend a student of the markets to just come up with their own syllabus or curriculum from various sources, could be Khan Academy textbooks, to actually learn this in a somewhat structured way, right?
Yeah.
I mean,
I think to be fair, means I'm not the best person to answer this question because it's a lifelong study. Means it's just like any other field. Uh, it's not easy. Means I'm sure like we can't say that there's no curriculum because there are definitely quite a few good books available. Means it's a good thing we should do next time. Maybe in our WhatsApp group we can have people share their favorite books on this. But I would say it's an observational thing beyond the basic theory. Yes, you can read a lot about macro. So if you can find good books, you can look at Ray Dalio, you can look at Druckenmiller. There are a lot of people who have written very good, their thought processes and all. So ultimately, you can learn from those. That would be my first recommendation because those are practitioners, not just theory. Because sometimes what we forget is that financial markets have become very complex. Like even if you read the basic Khan Academy style economics concepts, they don't apply as it is. Like one example is I keep getting asked these questions again and again that, oh, the earnings were great for this particular stock. Why did the stock drop after that? Means the thing is, when you do actual, many of these things are which people you learn after you practice things, that market is pricing in future. And there is no science for pricing in future because now you have a push and pull, right? Some people are trying to predict that it will go down. Some people are trying to predict it is going to go up. If it was a kind of exact science, you will not have the market at all, because at every trade there is a buyer and there is a seller. Some people believe that it's a time to sell. Some people believe it's a time to buy. That's how the market is made. So it is by definition a very tough thing to understand when you talk about market moves. But economics is easy. So what we talked about, money supply and all, this is more like economics. It's more theoretical. You can find books on it. When you talk about how to trade markets, let me put it this way. It is not exact science. Don't look for that. There are some, you can find books on technical analysis. Some people purely trade on charts. You can definitely find books on value investing, like Warren Buffett style or some other books, you can find. So it's a topic specific research. Everybody has a different way to learn. And again, means probably, I don't know if you are looking for this answer, but what I'm trying to say is it is not going to be ever a straight answer, and the knowledge is vast. Like people, I always say that there are millions of ways to make money and there are billions of ways to lose money in the market. So you have to find, your own way. And the one other thing which I always say is that if you are not confident, if you don't know, like when we go, when we have, like, we have to get a surgery, we don't do it ourselves, right? We go to a doctor. So if you're not, either you can learn, means definitely you can learn enough to treat yourself, with the basic things. So you should build your strategies like that. If you know the basics, if you want to do simple things, you should do it yourself, like investing in S&P 500, or picking a value, like, stock which knowing your industry. If you're in tech and if you know a specific industry like AI or something, you can invest in those stocks for long-term perspective. Now, long-term investing is probably easier to learn as a first stage. Trading is much more difficult, I would say, especially if you're trying to time the market, and that is where most of the people go wrong. So this is where so to be frank, means I don't have any specific answer beyond it, but what I can say is you have to find what really excites you. Means there can be value investors, there can be traders, and there can be momentum players. Like I would say the biggest investing today, a lot of people do, is momentum investing, because and it's purely because of it's give you a better high, it gives you instant gratification when you made 5%, 10% in a day or a week or something. But that is one thing which goes wrong most also. So that is one thing I would just say in terms of one pitfall of people who start trading. You can get confidence very fast by just doing a few good trades, but never. I don't think that has ever worked. So now, to simplify overall, what I'm trying to say is building knowledge. There are definitely good books. You should research, and we will actually, this is a great thread to start on WhatsApp group where we can talk about it. And but actually learning is involves different steps and different things which you can do, and you have to find what interests you. Don't do it just for making money, because as I said, you cannot just, if you're not interested in becoming a doctor, you will not become a doctor. Means even if you study hard. So that's the same thing with trading. Means if you're not into it, if you don't enjoy it, don't get into it. That would be my recommendation, and that's where index investing and mutual fund investing or ETF investing works very well.
Yeah. So,
Yes, go ahead.
yeah, two things. Also, Adi, AG, first name is Adi, I was told on the chat. So, Adi, you may also want to look at some of the videos, like you asking about macro aspects of money supply, not money flows. Money flows, like Raman said, is very subjective, and disparate sources are there in and out. But you can look at some of the videos also in addition to the books. I will share some videos on the uh,
Yeah. I think
chat.
that's a good point. So maybe that will, beyond the books, I think it's a great discussion to be had maybe on our WhatsApp group, where we can probably share some of the places where all of us have learned from, and we can share with each other. I think that would be very useful. Um,
Yeah. Raman, if I may finish, and of course, MBA. I mean, I did an MBA, and in MBA you do have a macroeconomic course, and I was lucky to learn under. I and my classmates were lucky to learn under Janet Yellen herself in 2002 in Berkeley. But the other point, Raman, I think people were asking about your newsletters, right? You send weekly. So what happens if there's some major event happens in the middle of the week? Then do you do some like? Then I guess your customers get the alerts and all, but Do you send any updated quick newsletter or any other type of thing, or
Yeah,
then
so I
just
think we do have our weekly write-up which goes out every Monday. That is what we do in open source, and then we have the all access subscription, which is goes out to the subscribers only. And that is yes, we do update them on critical events if we see any major meltdowns or any major opportunities. So that goes out. But I think from a weekly newsletter is the best place, and WhatsApp group is the best place to discuss day-to-day events. So I think in the interest of time, we are almost at the top of the hour. So quickly, I would like to say a few things. One is that please feel free to suggest topics for this weekly. I think we are having great discussions here every week. There was one discussion which was like, can we have more discussion on crypto? So we can definitely add more discussion around that. And let's take last 5-10 minutes on that. If you have any specific question as a for continuation from the last meeting we had. So I think so while I'm waiting for the questions in the chat, or you can raise your hand. So I would like to say, please feel free to suggest topics for next few weeks, and do invite your friends. As I said, this is an open forum, so not for subscribers only, WhatsApp group and this weekly discussion. So feel free to bring your friends, and we can improve point of views about. We can also have very specific discussions about what is happening in the industry around AI, around some of these trends, which can help us become better investors. We ourselves do a lot of research subscription. We read a lot of research reports and so on before to add to our subscribers' benefit. And as we gather more and more knowledge, as this community grows, I think we will only get better at making more kind of learned decisions and more intelligent decisions on investing. So that is our goal for this particular weekly forum. So I think this is, so I will wait for a minute or so. Let's see if any other questions are there. But basically, just to summarize again, we did talk about, where currently the markets are pretty much sitting at the top at a very high valuations. But the reason being that we are still seeing very good growth, whether it's AI, whether it is GDP growth from a US perspective, very stable environment at a macro level where we are not seeing any specific parameter going out of control. So I would do believe that we have some really good uh, conditions now to buy on dip at this moment unless something changes. And feel free to define what would be your concern areas. And I think staying invested is always has paid better for people in long run. So that is one thing I would like to remind that ever since this whole money supply or let's say money growth has fueled this bull run since COVID, I would say that we have not seen any major corrections beyond like 10, 12, 15%, and nothing structurally has changed. So go ahead. I think we have a couple of hands again.
Hey, so Raman, this is Anshu once again. So I missed your comment. So gold, you still think is there's a bull run remaining on gold, right?
Yeah. I would say gold. So as we have been talking about it since last year, let me say the thesis is very simple.
Yeah.
Gold has two tailwinds. One is the very basic money supply, and the whole we can call it as an inflation hedge, which gold was going up. There was a lot of actions against big US banks who were suppressing the price of gold. They paid, I think, hopefully they have learned from this, and they have paid billions of dollars in fine in last 4 or 5 years. So now gold is first time seeing some kind of a run, and the biggest factor of gold is geopolitical in nature. So since the Ukraine war and how Russia has already got all their assets frozen, nobody believes in having their reserves, and especially if you look at China, how
Right.
they have been exiting U.S. Treasury and buying gold. That shows you that this is the future, right? Where people are not going to trust. We are going from a globalized industry driven by dollar to less globalized, more, and with Trump amplifying the trade wars, this is going to further continue creating boundaries. And as more and more boundaries are created in the world, you will see more and more demand for gold. And for the same reason, Bitcoin. So I would say till China still has, I think, around 700 billion worth of US Treasury, which used to be 1.3 trillion or so. So they have already reduced their US Treasury by 50% while buying gold. I would say that's a great sign to track of the gold demand to be remaining high, because we know that China is buying. We know Like, even from a individual perspective, it's a safe haven in times of uncertainty. So we will see a lot more demand coming in for gold. So gold definitely is in a bull run, and I don't see anything changing structurally for gold from that perspective. And if this trade war rhetorics and all this deglobalization continues, I think gold will continue to attract more money. Because right now we are talking about just China buying. I think at some point India will realize that they need to increase their gold exposure. India has been buying, by the way. It's not that India is not buying, but it's not at that scale. And then you have Japan and many other countries who should worry about it, who are holding a huge amount of US Treasury. Because ultimately, one more thing which we are seeing is US Treasury is definitely not the reserve asset of choice anymore. Nobody's increasing. Everybody's either flat or reducing right now. So gold will continue to be in demand, in my view.
Okay. Yeah. Thanks. Thanks, so.
All right. So I think we'll take another one or two questions finally, because it's already almost an hour and we would like to wrap up on this Friday evening. Again, a reminder to let us know for any topics for discussion next week. And also, let's continue the discussion on WhatsApp. And please feel free to bring on more people as we grow this community. Go ahead,
Yeah.
Dhawal.
So Raman, this is in context of a question Pradeep also asked on the chat, and I also had. What are some he's asked about Bitcoin reverse BTC trend reversal indicator. What do you look at, and what indicators do you usually look at on your dashboard? Because you trade a lot, and just to know what's your sort of holistic view on the
Sure.
indicators, and how do you? And then second question is, how do you log your? Do you maintain some ledger of your trades? Is there some efficient way of ledgering stuff, even if you are trading less? Just be efficient.
Okay, so let me first take the question on Bitcoin. I think Bitcoin is, we have been talking about it. Like, my thesis is very simple. It's a digital gold, and it's already replacing, like, slowly getting institutionalized. We discussed a little bit about the theory around, first it started as individual investments to the institutional corporate treasuries are growing. Now we have individual states and countries, like US has almost 20 plus, or I think 25 states which have a bill in motion to add it to the treasury in the state assets. Trump administration has been talking about, and they have already established a team, and they have talked about national reserve, like, stockpiling Bitcoin and digital assets. There have been countries like Czech Republic, there's Switzerland. All these countries have been improving the law around Bitcoin. So Bitcoin is more of a adoption angle. So the most of it, what we are tracking at this moment fundamentally is that. Now, in terms of trading, I think you can do, means I don't want to comment on that again because of multiple reasons. One is that we don't want you to take it in isolation. Trading is a much complex game than just what I can tell you in one line or two. Indicators, I would say, is money flow again. Means Bitcoin, one thing is that it's a blockchain asset. You can clearly see the money flow, and especially there are major wallets which are tracked on chain, and ETF inflows are declared every day, end of the day. So you have a lot of indicators on what is the money flow, whether institutions are buying. We have corporate treasuries being declared on a very regular basis. So everything is probably more or less tracked on who is buying, who is selling. So those things are the usual indicators we track. And then, of course, the technical analysis, which we do, and we have, I think if you are the subscriber on All Access, we do have on Discord, we keep discussing the technical levels and how we track. So these are the two things which we do, either Bitcoin or anything. I think there are multiple factors which go into trading. But I think just to comment on that, what to start looking into, I think we can do those. That's a great suggestion on the chat, that we should start looking at those in the call, and we can start doing that. So maybe we can make it a format where first 5-10 minutes we look at that. And that is exactly the reason why we start with this US 10-year. That US 10-year yield is probably one of the indicator which we always look at. Like, and I keep talking about it in WhatsApp channel, but we keep posting it in our newsletters also, that why you should look at that as a primary, as we call it, as a what is the risk factors around inflation, what are the risk factors, where is the cost of capital, because that is the definition. I mean, one thing which I always say is that 10-year yield is basically a denominator for any valuation metric. So if how would you value any growth asset if your denominator is going down? If US 10-year treasury is going down, your result will be higher, right? You will value that it's worth much more for a certain growth. So, and this is one thing which I had done in 2022 when everybody was, and let me just repeat that for sake of, the audience. 2022, the most important question I used to hear in any talk I gave, and especially in Silicon Valley, because we are all very connected to the software world. People used to say, "Oh, I'm tracking this company, this software company." And if you remember at that time, we had the SaaS companies losing value at 70, 80%. And they used to say, why the stock fell 70, 80% while their revenue doubled from last year? And this is why I used to show the chart of US 10-year, how US 10-year used to be like below 2% and 1 point something, and it went up to 4% plus. And this is the denominator. And by the way, this cost of the capital was so low that growth was valued at much different pricing. So it's nothing wrong with the company, nothing wrong with so it's not always about studying that specific company, studying that specific stock. Sometimes macro impacts the valuation in the market much more. This is why you should look at some of these things, like what is, and it's a great suggestion. Like, let's start defining those, and this is the kind of discussion we want to get out of this macro discussions. What are the parameters to track at the macro level? But then, of course, macro is just everybody can see it. So market does take the direction based on macro, but then trading is not just about macro also. So let's also try to differentiate between day-to-day moves versus medium to long-term moves. And macro can definitely help you identify medium to long-term moves in terms of valuations, so which we keep discussing here. So again, I think as we will close here. Thanks for all for participation and great questions. I think we are improving this community every day, and let's continue in our WhatsApp channel for this question, and we will do another poll on what topics to take next week onwards, and we'll keep talking every week. Thank you, everyone.